Hi everybody, it's FIBO Group, and you're watching to the Market Watch review. The markets continue to process the implications of yesterday's Fed move and Beijing's signals of economic support efforts that are similar to the Bank of England's. Yesterday's surge in Asia-Pacific stocks continued. With a 6.7% gain, the Hang Seng was at the forefront of the surge. Stoxx 600 in Europe is showing small gains, while futures in the USA are reversing yesterday's late gains. Initial rallies on the Fed statement saw the dollar rally, but the gains were retraced during Powell's press conference. Today, it is less than most currencies. The Australian dollar is the strongest major currency, thanks to a stronger than expected jobs report. Yesterday, gold traded at $1,900 below before recovering. The recovery continues today, and the yellow metal is close to $1,944. APO WTI seems to have established a base of $93 to $94 and is now trying to reach $100. Asian Pacific market. Australia's employment rose by 77,400, which is more than twice the median forecast from Bloomberg's survey. Yesterday's jump of 1.35% by the Australian dollar was its highest since November 2020. The gains are continuing today. Tomorrow's Bank of Japan meeting will be concluded. Standing pat will only highlight the divergence between the U.S. and other monetary policies. Yesterday, the dollar gained slightly by JPY 119.10 and is now consolidating below this level today. Market of Europe. We are eagerly awaiting the Bank of England. The Bank of England is expected to increase its inflation outlook. This will help to underline the policy path. The base rate will rise to the level it was before the pandemic. Today's hike will mark the third consecutive increase. Sterling fell below $1.3050 yesterday when the euro was at its lowest. However, it reversed and rallied a cent. Today, those gains were extended to $1.3190. Today's euro traded at a 5-day peak in early European turnover, just above $1.1065. The high last week was close to 1.1120. The 20-day moving mean is 1.1095. Market of America. The dollar tends to rise ahead of any Fed hikes in recent cycles, and then it falls as tightening continues. According to research by the Bank of International Settlements, there has been a slight decline of around 4%. The Fed's inability to achieve the soft landing that will bring down inflation without triggering a recession may be part of the problem. Many people are skeptical that a soft landing can be achieved. Yesterday's Canada's February CPI report was higher than expected, at 5.7%. This is compared to January's 5.1%. Next, the Bank of Canada will meet on April 13. On Tuesday, the U.S. dollar reached a high of CAD 1.2870, but then fell back. It trades heavily and climbed to 1.2650 in European morning. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.